In this video, I'm going to introduce you to the statement called trial balance, which is the third step in the process of accounting cycle. The first question is, what is trial balance? The answer is, it's a statement of account balances. Let's discuss these two aspects. What is a statement and what do we mean by account balances? A statement as opposed to an account. Let's understand the contrast between a statement and an account. Till now, we have been working with ledger, in which we have posted journal entries in a chronological manner. So an account looked like this, where you had a debit side and a credit side. And let's say if this was cash account, you had transactions where you got cash, any other income on the debit side, and you spent the cash on a number of items, expenses or any assets that were purchased. Now, these transactions happen over a period of time. Therefore, this account is showing you that on the first day of the month you did a sale, on let's say second day this happened, fifth day, seventh day, eighth day. So this is a duration of time. During 1 month or during 1 year, you are looking at what all transpired in a particular account. Therefore, account is prepared for a duration, for a period of time. After having prepared this, any account, you look for what is the balance, by balance carried down. This is the balancing figure. What is the amount left in the cash account? What is the cash in hand that we have at the end of this financial period? Now this balance is as on the last day of the financial year or the accounting period for which you are preparing the bank account. So this balance is true, this data about the balance in hand is true on this day. The following day you will spend some more cash, so the cash is going to go down, or you may receive more cash. So this one specific transaction is true on a given day. However, overall the account is going to show various transactions happening throughout the period for which account is being prepared. Now let me contrast this with the statement. A statement is prepared on a date. So in a statement which we are now going to prepare, trial balance, which is a statement, it is going to show us account balances. So these balances, let's say cash balance. So what is the balance in the cash account? It is 100. So the trial balance is telling you that at the end of the financial year, at the end of the accounting period, the balance left in the account is 100. What is the end of the accounting period? Well, this is as on March 31st and 2020, last day of any financial year. So this 100, this data is accurate as on this date. On 1st April, the data could change. So that is the difference between a statement and an account. While the account is a flow concept, where you are talking about flow of money during an accounting period, this is a stock concept. The stock concept means on a specific date, what is it that we have in hand? And it could relate to cash, bank, or any other account balance. It could be any item of asset, liability, income, or expense. Alright, so that is another technical difference between a statement and an account as defined in the accounting language. Let us answer the second question. What are account balances? Well, you prepared cash account, you prepared purchase account, you prepared an asset account. All the accounts had a closing balance, by balance carried down or to balance carried down. So these balances is what we are referring to. At the end of the accounting period, what is the balance left in a specific account? That, when shown in a statement form, we call it trial balance. Let me talk a little bit more about what trial balance is. Trial balance is also thought of as a proof of double entry system. what is a double entry system? Double entry system basically says all debits have equal credits. All debit amounts are equal to credit amounts. In the trial balance, we are going to report the account balances, as I said, and the account balances here, these could be debit balances and these could be credit balances. So if you have sales account here, if you have any other liability account, so this is going to have credit balance, debit, and debit. The idea is that the balances in all the accounts with credit balance is going to be equal to total balance in all the accounts with debit balances. So that is, when arranged in the statement form, all account balances will show debits equal to credit. And we will, as we prepare the trial balance, we'll see more about it. So this statement is thought of as a proof. If debits are equal to credit, then you've not made an arithmetic mistake at least, and you've followed the process of double entry system. So just to summarize, all debits will have equal credits, and arithmetic accuracy is checked. And if there is any, if there is difference in the balances of debit and credit, then there must be some mistake which needs to be figured out. Let me make it more clear to you with the format of the trial balance. This is the format of this trial balance. So trial balance is prepared as on a date. So as on March 31st, 2020, on this date, we are going to say cash account. Cash account will have a debit balance and we'll write the amount here. Similarly, we could write capital account, any other account, and it could have a credit balance 100. So likewise, you have all the accounts that are going to be listed here, and it is important for you to know the concepts of what is a debit balance, what is a credit balance, because you have to then show these balances in specific columns. At the end of the statement, the total on the debit side has to be equal to total on the credit side. If that is done, that means you have written the journal entries correctly, you have posted the journal entries in the right accounts, and the statement is correct. The double entry system has been followed. So we will do some practice problems, some tutorials on this going forward. So let me stop here. This was a quick introduction to the statement called trial balance. I'll see you in the next video.